We are still going through a debt, currency, and liquidity crisis, and we're just trying to ask ourselves, where can we find safety from counterparty risk that's going to get us exposed to this problem that we have on our hands? And so for new people coming into crypto, they're wondering, where can I buy and sell it? Who can I trust to custody my crypto? Should I custody it myself? And what is institutional grade custody actually? And then we also might want to cash out, right? If we've made some crypto, for those of you guys that have been in the game, you want to take some profits and actually cash out. So I'm going to break down what to look out for when it comes to picking exchanges, brokerages, and custody platforms for trading, buying and selling, for custody, and also for cashing out. Now, if you appreciate our content, make sure you guys have liked this video, help us out by sharing it out far and wide, subscribe and hit the notification bell so you don't miss any of our updates. And let's get right on into it, folks. Let's get it started. So when it comes to trading, right, what we're looking for is transparent fees. That's the big deal. Just this morning, I went to go check a platform that you guys know very well. I'm not going to name them, but they were going to hit me with a 2.5% spread on the trade. Now, what that means is that XRP was at 281, and that was the market rate for XRP. But if I went to sell some of my XRP, they were offering me about 274, which equates to about 2.5% spread. Now, this does not include the trading fee on top of that. And then if I did want to cash out to my bank account, it doesn't include the withdrawal fee as well. Now, this platform too also has me limited on how much I could cash out on a daily basis to 25,000. So when it comes to looking for platforms that are going to service me, right, I'll just list off a couple that I use and we'll break down the differences between them. When it comes to exchanges, right, this is where many of us are going to start out on crypto exchanges that are centralized buying and selling, okay? I've also learned how to use the XRP Ledger DEX, and I've put out a video, you guys can go check that out on my channel, how to trade using the XRP Ledger DEX. The big concern and problem for the XRP Ledger DEX trading, for example, if you wanted to take profit or secure profit by going from XRP to RLUSD or another stablecoin on the XRP Ledger, is that there's such low liquidity. Okay, so until liquidity builds up on the XRP Ledger, it's not going to be able to handle much volume, much selling from XRP to RLUSD with the current liquidity levels that are in those pools. Okay, so although that sounds nice, no middlemen at all, no centralized exchange, no brokerage, no issue, you're in full control, no fees besides the XRP Ledger fee. But the problem is that when the time comes and everybody's hammering that, there's not going to be enough liquidity. And that's when you're going to get hit with slippage, which is different from spread, right? Spread is just the bid-ask difference on any given marketplace, exchange, etc. The slippage is when you're going to the order book and there's no order there to fill you up. And so that slippage is going to take you down to the next order block that does fill your order. So for example, if XRP is trading at $3, you might go to the XRP Ledger DEX and try to sell your XRP for 3 RLUSD. But because there's not enough liquidity, you're going to get hit with a little bit of slippage. So you got to watch out for slippage. You got to watch out for spreads. And then the other problem with these centralized exchanges is, of course, there's no bankruptcy remote protection. So just like when FTX went bankrupt, you have a long line of creditors, people that were customers of FTX, waiting to get their share of what they had invested on the platform. And all of the FTX investors did not get paid out in kind, meaning if they had Bitcoin or XRP on the platform, they did not get paid out in those tokens. They got paid out in dollars or stablecoins at the market rate at the time of the bankruptcy, which was in November of 2022 during the depths of the bear market. So imagine you're using a platform that goes bankrupt and you don't get your money till 3 years later, and you're not getting your money at the today's value of the tokens that you had, you're getting it at the bear market bottom. That was the FTX situation, and we don't want to end up there. And so what I'm looking for when it comes to a platform in a centralized platform is going to be bankruptcy remote protection. If you go down, I don't want to be in line with a bunch of creditors. I want to be the beneficial owner of the assets. Now, what we have on Caleb and Brown, this is just one example, is you get the bankruptcy remote protection, you get free institutional grade custody, They also provide the transparent trading fees with no withdrawal limits and personalized broker service. Now, I compare this with other platforms that I do use, like Coinbase, which does have low fees, but does hit me on a spread, right? Can hit me with a little bit of slippage. And then, although the fees are low, and I don't have any withdrawal limits over there, the problem is if anything did happen to Coinbase, God forbid, there's no bankruptcy remote protection. Now I slide on over to Uphold, and I've been using Uphold for years, and I have always loved Uphold. They're getting a little bit aggressive with the spreads from what I've seen lately, right? And the problem that I have on Uphold, which is just, my own issue, is that with the small credit unions that I bank with, I can't link my bank account to Uphold. And so I'm stuck with withdrawal limits of $25,000 per day to my debit card, right? So if I go to cash out to my bank account using Uphold, I'm limited to $25,000 per day. And plus they hit me with a 1.75% withdrawal fee. I don't like that. Nobody likes that, right? So when you go to conduct a trade and you might be thinking, well, I got a little bit of spread, sure. I got a little bit of a trading fee, sure. It's not that much, right? This is just the cost of doing business. And I want, I should expect to pay for that service. And I would agree, right? But the problem with some of these exchanges is they're not really disclosing it completely. They're kind of hiding it. And so this is what we consider to be hidden fees. And this is what I don't like. And I'm seeing this on other platforms where they're not really showing you, right? They're kind of covering it up and slipping it in through your order. You're not even realizing that you're getting hit on spread. You're getting hit on a fee. And then if you go to withdraw, you're going to get hit with the fee and a limit as well. Next thing you know, your fee ends up being 5 to 6% to go conduct a trade and a withdrawal on some of these platforms. And so I use Coinbase mostly to trade futures. I don't buy and sell cryptos on Coinbase really on a spot basis anymore using Coinbase. I've used Uphold in the past. I still use them today, but I'm just cautious right now of conducting any big trades over there, understanding that the spreads sometimes can be a little dramatic, a little more than I would like. And I'm just limited personally because I can't link up my big bank. Well, I could, I bank with a few banks too. Once again, guys, I give myself options. I have multiple banks, multiple bank accounts within those banks. I use multiple exchanges, a couple different brokerage platforms. Uphold is a brokerage, and Caleb and Brown is a brokerage. And I also use self-custody. Once again, most of my XRP is held in self-custody with no liability, no leverage, no nothing. It's just buried in the backyard, right? But when you do want to trade, buy and sell, and when you do want to maybe cash out, this is when we got to go look at these platforms and see who's going to service us the best. Now, I wanted to break down, though, what truly is institutional grade custody. Because for me, this is where I'm moving. Sure, we're going to buy, sell, do our business on some of these platforms when we need to. That's okay. But when it comes to holding these assets, I'm either going to be holding it in cold storage or I want it in institutional grade custody with bankruptcy remote protection. So I asked Grok to help me out here in defining what institutional grade custody is for crypto holdings. Now, the main things right here is going to include security, multi-layered protections like multi-sig wallets, cold storage offline, hardware security modules, and advanced encryption to prevent hacks or theft. The other thing is compliance. You want adherence to regulatory standards, including KYC, AML checks, audits, and reporting to meet institutional and legal requirements. Access controls, robust authentication, role-based access, and approval workflows to ensure only authorized personnel can manage or move assets. You're going to be looking for insurance, coverage against risks like cyber attacks, internal fraud, or operational errors, often backed by third-party insurers. Scalability, infrastructure to handle large volumes of assets across multiple blockchains with seamless integration for trading or portfolio management. You're looking for reliability, 24/7 monitoring, disaster recovery plans, and uptime guarantees to ensure assets are always accessible when needed. Now, here's the critical part. Examples include custodians like Coinbase Custody, which, by the way, is only for institutional clients. They don't offer it for retail. Fidelity Digital Assets or BitGo. which cater to institutions by offering these features, contrasting with retail solutions that may lack such rigor or oversight. This is the problem, is that some of these platforms, even like Coinbase, right, is offering institutional grade custody to their institutional clients, but they're not offering it to retail. You'll see other providers in the space which are providing institutional grade custody, but they have massive minimums where you got to be investing, 6-7 figures in the platform to be able to get this level of service. And this is what I've appreciated with Caleb and Brown, right? Because they provide free institutional grade custody, personalized brokerage service, and bankruptcy remote protection to everybody. There is no minimum. It is absolutely free to sign up with their platform. That's what we like to see. Now, furthermore, we know that Caleb and Brown uses Fireblocks. So how does Fireblocks, as the custodian for Caleb and Brown, how do they have institutional grade custody, and what all is that entailing? Fireblocks provides institutional grade custody through a combination of advanced technology, regulatory compliance, and operational resilience, enabling large-scale investors like banks, asset managers, and exchanges to securely store, transfer, and manage digital assets across over 80 blockchains. Unlike traditional single-key storage, Fireblocks emphasizes direct self-custody, where institutions retain full control without third-party intermediaries, minimizing counterparty risk while scaling for high-volume operations. This is powered by their proprietary multi-party computation wallet infrastructure, which has facilitated over 60 billion in transactions in 2024 alone. What are the key features? Right, this MPC, multi-party computation wallets. This employs MPC cryptography to distribute private key shares across multiple parties, ensuring that no single entity holds a complete key. This supports hot, warm, and cold storage solutions with hardware isolation via FIPS 143 certified hardware security modules. MPC CMP certified multi-party computation adds enhanced recoverability and scalability for enterprise workflows. Cold storage. They have bank-grade, access-controlled hardware for offline asset safeguarding, integrated with dedicated signing solutions like the Business Continuity module for uninterrupted operations during disruptions. Governance and policy engine. You have automated workflows, enforce role-based access, multi-approvals, and risk controls before any transaction, preventing unauthorized movements. Network connectivity. The Fireblocks network connects to 2,400 plus counterparties. Example would be exchanges and liquidity providers for secure, rapid transfers without exposing assets. These features have 0 reported breaches in custody operations. I'm going to repeat. These features have 0 reported breaches in custody operations, making it a trusted backbone for institutions like BNY Mellon and Visa. See, Fireblocks is used by some of the top institutions, banks in the world, including BNY Mellon, who Ripple just partnered up with to actually hold the collateral for ROUSD. Right? So when we look at Fireblocks as being one of the leading providers in the space, right, they check off all the boxes. They check off all the boxes, and they really complete this customer experience that we've known to come and love with Caleb and Brown, right? Because Caleb and Brown is the personalized brokerage service, but then Fireblocks is the institutional grade custody, same platform being used by BNY Mellon and Visa. Now, when it comes to compliance and regulatory standards, Fireblocks adheres to global standards to meet institutional mandates. They're licensing. They're operating through a NYDFS, that's New York Department of Financial Services, regulated Fireblocks Trust Company, complying with New York banking law, SEC custody rule, and SOC 2 Type 2 ISO 27001 certifications. They have KYC AML reporting, sure. Global custodian network, partners with licensed entities like Zodiac Custody, Galaxy, Bakkt, for localized compliance, allowing seamless asset segregation and jurisdiction-specific custody. So they're a worldwide platform, right? And depending on which jurisdiction the platform is in, they can meet all compliance and regulatory standards. This framework supports use cases like ETF issuance, tokenization, and staking with integrations for DeFi via Wallet Connect. Now, I didn't know this until I looked this up, but apparently for insurance and risk mitigation, Fireblocks has up to $1 billion in third-party insurance against thefts, hacks, and operational failures covering digital assets in custody. $1 billion of insurance to their providers. It's pretty incredible. And for scalability and integration, Fireblocks scales for enterprise needs with API for embedded wallets. Yep. In summary, Fireblocks transforms custody from a vulnerability into a strategic advantage by blending cutting-edge MPC tech with rigorous compliance, empowering institutions to innovate securely in the digital asset economy. And once again, this is just the custody end of the situation, right? When it comes to buy and sell trading activities as well, you want a platform that's going to, be fair to you and treat you well. And we've come to know and love, right, the transparent fees on Caleb and Brown, although, it's not free, right? The fees can be negotiated for big hitters moving big bags, right? So that's been great. I've gotten great feedback from some folks that we sent over there with big bags. And they said, yeah, they were really willing to work with us and service us in that regard. But then it's the custody part of it too, right? And so for me, right now, I am still using some of these centralized exchanges. I'm going to use the DEX, but I've come to prefer this experience of personalized brokerage service, knowing that my assets are segregated in institutional grade custody, and I'm not being charged for that. That's free institutional grade custody, right? With bankruptcy remote protection, right? And that is the full experience that, we've come to love with no withdrawal limits. So once again, when you go to cash out of some of these platforms, check your limits, right? Because as this bull run continues and folks are taking profit, I hope that you realize that, the order books are going to thin out. So one thing, it's going to be a challenge to get your order through. But if your order does go through, right, and then you go to cash out to your bank, make sure that you have your bank integrated and make sure you're not going to get hit with withdrawal fees and withdrawal limits that could really rack up the fees and make it difficult for you to actually cash out to your bank account. So once again, what am I doing? I'm still tapping into the centralized exchanges and I use them when I need to. But I've already moved all of my assets to cold storage, and I have a couple cold storage wallets linked up down below in the community resources for you guys. But what I plan on trading, I'm now moving to institutional grade custody with Caleb and Brown. And going forward, I'm looking at setting up my Roth IRA, and I will be using my channel sponsor, I Trust Capital, who also uses Fireblocks for their custody solution as well. So right now, actively, right, I'm tapped in with the centralized exchanges. When I need them, I use them. But then I pull off and I move to Caleb and Brown, and I move to cold storage. And then when I do open up my Roth IRA, well, I'm going to be using my channel sponsor, I Trust Capital, and, feeling very secure using them, knowing that they're also using Fireblocks for institutional grade custody. But whether or not you use any of my affiliate links, resources, or the same platforms that I use, I just wanted to educate you guys on what you should be looking out for when it comes to exchanges, brokerage platforms, and custody solutions in the cryptocurrency space. So once again, if you appreciated this update, please help us by liking this video, sharing it out far and wide, and I will see you guys in the next one. God bless you all. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.